The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the April 21st, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is tossing at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, send it to Steve at TFNN.com. Inside the subject heading, please put radio show question. Now, if you're inside our Tiger's Den, and you should be, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We'll begin our day with a sea of red. Dow's down 923 points, about 2 3/10%. Everything down about 2% or more. Semis are down 3%. S&P's off 2 3/10, 125 points. 461 for the Nasdaq. That's a 2.5%. 2.5% move there. Up to 2% now for the Russell. That's a 36-point move. Trend is off 402. That's 3% even Steven. Gold is up $95, nearly 3%. Silver's up 13 pennies, less than 0.5%. Natural gas is down $1.67. That's off nearly 3%. I'm sorry, that's light sweet crude down $1.67. Natural gas off 17 cents. That's a 5% move to the downside. So we've got movers and we've got shakers. Our leaders in the clubhouse, by the way, to the upside. Netflix up $26. You've got MicroStrategy up $5. Micro Algo up $4, mostly ETFs that are trading. To the downside, we're led by Costco off $26, 2.6%. You've got United Health down $23. Service Now is down 21, less than 3%. BlackRock $22, about a 3% move there. Azimut Holdings $21, 3.25%. So we got movers and we've got shakers. Let's begin our day by taking a look at what? Let's take a look at. Let's do this. Let's take a look at the. This is probably not the chart we're going to look at. I'm going to go put the intraday charts here for the ES, the NQ up on our screen. Let's really start there, see if we see any kind of bottom signal. So here's the ES mini. As we take a peek around, I do not see a single, well, I take this back here. Now, if we take a look at the 60-minute time frame chart, when we end the show at 12 noon, you will have a completed TD9 count. You will have a confirmed TD9 count bottom. It will complete by 1 p.m. So keep your eyes on the 60-minute time frame chart for any kind of bottom signal. With regard to the other time frames, there is nothing on my screen just yet. And on the ES Mini, that could suggest a pullback to the 49.26 level. That is the bottom of its daily profile. Let's go take a look at the NQ out here from an intraday standpoint. I typed in the wrong thing. Sorry about that. We'll get this up here momentarily. Let's see, my eyes will first gravitate towards the lower left-hand corner, the 60-minute time frame chart. We're looking for some kind of synergy here. Is the 60-minute NQ also going to go ahead and confirm a TD9 count pattern at 12 noon? The answer, drum roll please, is we still got to wait. Too early for that drum roll. Come on, why are you taking so much time here? It is what it is. Now, on the daily time frame, that chart is populated. Yeah. So we will get a confirmed TD9 count bottom pattern for the NQ for its 60-minute time frame at 12 noon, completes that pattern at 1 p.m. That suggests that we should see a rally towards the 18,034 level. Let me just pull up all the 60-minute time frame. Now, when I look at the other intraday charts out here, I do not see any other bottom signals. So very much like the ES Mini. Let's see if we've got any kind of synergy here amongst our 60-minute time frame. Pull up these charts here. Hopefully they populate on this screen. If not, we'll pull them over. So this will take, a few moments to do that. Hope everybody had a great weekend out there. Yeah, good. It's going to populate on this set of screens here. So really look at the bottom panel where we've got the Dow Equity Future Contract, no TD9 count signal there. What it has is a Rhodes Momentum Indicator signal. That would require a bullish reversal candle to confirm a bottom. But the Russell is acting just like the ES and the NQ for its 60-minute time frame, and it will also confirm at 12 noon a TD9 count bottom, complete that pattern at 1. So what you're looking for here is rallies towards 52.24 for the ES, 18,034 for the NQ, 1865 for the Russell 2000. And if we get a bullish reversal candle in the Dow, it'd be about the 38,638 level. What you do is look to those intraday charts, those like the 10 to 15-minute time frame charts, to give you a feel whether that TD9 count bottom is in by noon or whether it's one that's likely going to form by 11 a.m. Now let's go back. Let's get out of this set of charts here. Let me go ahead and actually close this down. We have the information that we were looking for, which was really just trying to understand intraday, is there any kind of bottom signals inside the equity future contracts? Now, if we take a look at the daily time frames out here, we'll go back now to all 4 daily equity future contracts. Curious about the Russell 2000 to see if it is now below its red oscillator and change line. The answer is it's not. So the Russell is actually stronger than the ES, the NQ, and the Dow from the standpoint if price still remains above that red oscillator and change line, which is 1846.30. We close below that, it'll join their pattern. That pattern says as long as you remain below that, you've got pressure to the downside. Now, in each case here, we are trading inside the swing point. It's swing point low. So for the ES Mini, that's a swing point from April the 7th, and as long as we're inside that, even if it's without volume, by the way, on that bar was 3.6 million contracts so far today, 423,000. Jeez. Now look, we're going to have light volume in the markets, period, or we should have light volume in the markets, period. We still have all of Europe is still on holiday out there. I wish we were on holiday, got an extra day for that. But as long as price remains inside these swing points, it opens up the possibility of getting back and testing the lows out there. Now, in the case of Russell 2000, we will not draw that conclusion unless price closes below that red oscillator and change line. Again, right now, that's printing out at 1846.30 out there. Let me go back to my e-signal charts out here. Let's see what information I can share with you here. Let's begin by taking a look at that New York Stock Exchange, its advanced decline oscillator. It is now below the zero threshold level. Does that mean that sellers are now in control? The answer there is no. We would need to see 2 consecutive closes below that zero threshold level to suggest that is the case out there. But that's something for us to be paying attention to. We are still in that contango position out here. What I mean by that, if we take a look at the spot VIX index, trade out at 33.94, up $4.29. As we speak, you can see that price is above the 6-month, the 3-month, and the 9-month issue. So that contango position still exists out there. And that means that from a contango standpoint, that bottom that formed on April the 7th is not yet confirmed with this tool. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. About 2 hours of trading, just shy of it right now. The SPY's got volume of 16 million shares out there. Now, that's going against both that move to the upside on April the 9th out there that had 241 million shares. The swing point that price is trading into is a swing point from April 7th. Volume there, 256 million shares. So you can see that right now we're, as I say, let's call it 20 million. We're at 16. That would be about a 60 million share day going into 256 million. You want to talk about light volume? It is majorly light volume as we speak right now. So it says markets are more easily pushed around. Let's go take a look at the first request, really about the only request that we have so far, which is ticker symbol CELF and this, or CELH, and this is actually a holdover from last Thursday that we didn't get to in time. Whoops, excuse me, I went to the wrong tab out there. We'll get to the correct tab out here. And we got CELH. It has been trading with inside its daily profile out here. That range is between 35.10 and 37.81. It has a Rhodes momentum indicator signal that is present at the moment in time, and it's likely to be a bearish reversal candle at day's end. So what that suggests, and I apologize because I did not write down who had this request, it was just they were looking for an entry. So if you get a daily Rhodes momentum indicator signal, that suggests that price should at least pull back to 35.10. 35.10 would be the bottom of its daily profile. There's potential that that is a buy point, but the weekly chart says no, Stevie. We're going to go ahead and complete that TD9 count top this week. We're trading below last week's low out there. So that's already off to the start. That suggests that price wants to pull back towards 29.10. And 29.10 is the top of its daily profile. That would be an even better entry point if, in fact, that's what was going to unfold here. And I would say it would be between the level of 26.44 and 29.10 that might pique your interest. Now, on a monthly time frame, CELH has a nice TD9 count bottom. It went ahead and confirmed that pattern last month. It completes it this month. What price has done, it's run into resistance into its sell zone. So only a close above the top of the sell zone. The top of the sell zone would be at 36.79. Would say, we know what it really say. It would say, I still have another level of resistance, and that's at a monthly oscillator and change line at 41.76. But right now, you're up at resistance. Resistance held on the monthly. TD9 count top on the weekly, and it looks like today you're going to have Rhodes momentum indicator top on the daily time frame. So again, you got to first watch that 35.10 level, then go down to the intraday charts when the price breaks through that area. And the swing point that it's trading into is from April 7th. That swing point had volume of 10 million shares. So far, in less than 2 hours of trading, this has done 1.4 million shares. So even if it's 2 million shares, it's about 6 million shares going into 10. It's still light volume here as well. But no entry point as we speak just yet. Let's maybe right back to me as we get towards that 35.10 level out there. So thanks for waiting an extra day, and I hope that helped whomever it was that had that request out. As I say, no request really in the system. Well, I take that back. There was two that came in by email. One was to take a look at EEM. Now, what I'm going to do here is I'm going to move off of this chart and go down to this one. This doesn't have my daily cadence, weekly, monthly, or what have you, but it will populate a little bit quicker out here, or should. So let's take a look at the EEM, the emerging markets out there. They should be doing pretty well with the U.S. dollar index croaking out there. But as I did say, the U.S. dollar index looks to me like it's getting ready to form a bottom. We'll come back and take a look at that. So here we can see the EEM. It has had a nice move with that U.S. dollar index rally. It's got a nice daily TD9 count bottom pattern. And I don't have a daily reason. I don't have a daily chart, the reason why price stopped where it did. So that says, okay, go take a look at the weekly chart. On the weekly chart, price got up to the center of its profile. It's pretty much the center, really. So no bullish or bearish structured profile at the 42.41 level. So buyers and sellers were there. So that would make sense. Price pulls back a bit. Now, no damage here at this stage. Unless price were to close below 41.51, that would be the bottom of the weekly profile. The monthly time frame has a TD9 count top. That TD9 count top found support at the bottom of its profile at 40.20. So work to the downside on the EM. In essence, you could say was done. On the daily, it was done. On the weekly time frame chart, not so much, although price did get back to its breakout level at 38.49. But the thing is that the EEM typically and the U.S. dollar index have got an inverse relationship. Now, maybe I'll be able to put that in during a breakout there on my e-signal system. I don't want to do that at the moment, but I'll leave that up, and we'll see if we can come back to that to take a look at that analysis. Let's go take a look at EFA, and we'll kind of integrate that into taking a look at the possible bottom that the U.S. dollar index could be making, not necessarily because of its patterns, but because of the patterns on the euro, the yen, and the pound out there. If we take a look at EFA, looks like an EEM type chart out here. This also, now I don't have a second here. So this bottomed with a by the D point pattern back on April the 9th out there. But I'm just assuming that, again, I don't know what EF, I don't know what the EF is. Maybe somebody in the, let me just do this here. Let me just do a quick search. Just see what EFA is. EFA. There we go. ETF. What ETF is that? That is the iShares MSCI. Okay. So again, and I'll put the I think this typically works in the inverse relationship with the U.S. dollar index. What I can share with you on the daily time frame is that it has that by the D point bottom. Price remains above profile resistance. If the U.S. dollar index is not forming a bottom, then perhaps price is going to go target 84.32. On the weekly time frame, price found support after forming a TD9 count top at its breakout level of support at 74.24. What we're looking at here is prices traded with inside its profile, but if it does close below the bottom of that profile level, and that's the price point of 80.42, well, then an area of support will have failed. And on that monthly time frame, it's just got a nice consolidation pattern that formed after its TD9 count top. We can draw that pattern in here, and maybe it's just simply the consolidation pattern with price right now being towards or was towards the top of that consolidation. Now the question is, it moved towards the bottom of that consolidation? correlation out there? I don't have the answer to that question, but what we will do is watch that daily and the weekly time frame. The weekly time frame says watch that first level of support. And again, that was at 80.42. The next level of support would be around 79.47. That would be the oscillator and change line for the daily time frame out there. As I mentioned, no real request out there. Very odd, but it is a Monday. Let me just check the emails, make sure nothing else has come in. And if not, we'll go take a look at, there we go, Tesla. Vic writes in, and Vic would like, can this be a 3-drive? Okay, so now what we're going to do is we're going to switch charts. Going to go to the black background system. So if you give me a moment here, we'll get this one cleared off. We'll pull up the black background system, and we'll take a look at Tesla. So we'll get to the area here where we can pull that up, and then we'll use Stevie's 3-drive to a bottom or a top. 3-drive to a, well, so when I take a look at Tesla, can this be 3-drive? The answer to that question, I don't even have to do, the answer to that question is no. If you look at the daily time frame, I don't see that at all. So here's an example. Let's see if this is an example. Shoot. Let me put the GDX back up, and we will take a look at Tesla. But what we'll do is we'll take a look at the GDX first. Why, oh why, the Tiger's Den is suggesting there may be a 3-drive to a top pattern. So we'll take a look at that and what that might be. And then we'll come back and we'll take a look at Tesla. In the meantime, I'm going to try to do the oh, I don't have the correlation chart up on my screen. Bummer. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So you've got the chart for EEM, the emerging markets, up on the top panel of my screen. You've got the U.S. dollar index on the bottom panel. I'm sorry, the center panel. The bottom panel is the 3 or 5 day average directional correlation. Let me tell you which one that is. Now you can see that the bars are primarily all to the downside. That tells us that we have a inverse relationship. This is a 5-day average out there. I can change this, just simply get to a little bit shorter time frame. We go to a 3-day, and it's still all the primary moves out here are to the downside. So there's that. So I caution on the EEM. I'm going to throw out caution to you, and you'll see that when we take a look at the U.S. dollar index. Not necessarily today, but soon out here. Now, back to the idea of the 3 drive pattern out here. So let's take a look at that. Give me a moment. It's going to be all the way to the back. A moment to get to that chart here, and then we'll take a look at Tesla. So the possibility of a 3-drive pattern, we're going to open up the daily time frame chart for the GDX. Now, you can't force this pattern, or you shouldn't force this pattern. So if we're taking a look at 3 potential drives out here, we would use the first drive, being on the trading day of February the 14th. Looks like I missed that here. Let me just move that over by a day. Let me just slide this over if I can. Will it? There we go. And we're going to get dead on balls accurate. The second drive out here, or the next high that basically forms for that. Oh, it's off altogether. Just by a day. So, but that's okay. Let's just redo that. So give me a moment here. I don't know why things are slow, but they are. There we go. So now let's get that 3-drive tool out here. 3-drive tool out. And I'll just do it this way to make it a little bit easier. So there's our first drive. The second drive taking place on that trading day, as I say, of March the 28th. And then that would then suggest that the 3-drive pattern out there, if in fact that's what you would be using, which is what you should use if you take a look at the daily time frame, would get us out to May 9th before that 3-drive to a top pattern would form out there. So now when we take a look at Tesla, we don't have anything of a pattern that looks like that altogether. There needs to be expansions, by the way, Fibonacci expansions between those drives out here. In the case of Tesla, what we have is we have a bottom that formed out here on the trade day of March 11th, 174 million shares traded then. That 174 million shares was tested with 183. It was tested and rejected. That suggests, because we tested with volume, you'd be back for another test. Well, we tested with 171 million shares, and then we tested it again with 219 million shares. So all those tests with volume says, well, we should be back down there. Where are we today? We're back down there. We're back down there. Now, today should be a low volume test. It's 41 million shares, but that's still 120 million share day, give or take, versus, so that could be the test. Now, what you'd be looking for there is a test rejection on lighter volume would require a close above 237.06. But no 3 drives or anything like that Stevie sees with regard to Tesla. But let's go take a look at what the Tesla stock is doing out here. So from a Tesla standpoint, we were looking at the swing points. What I can share with you is on the trading session of April the 9th, price formed a Rhodes Momentum Indicator bottom pattern. And only a close below the low of April 8th, that was a bull sash candle. That says that the low of that prior candle, April 8th, is the support level. That support level is 217.80. In other words, a close below that would then negate that signal and say we may be headed lower. So you've got a Rhodes Momentum Indicator bottom on Tesla on the daily. The weekly has a TD9 count bottom pattern. The monthly time frame does not have a bottom pattern other than price pulling back towards profile support, and that'd be at 212.65 out there. So that's what I see when I take a look at Tesla. I do hope that helps you out. I hope that 3-drive piece of it, at least going through an example of a potential 3-drive, I hope that helps as well. And now let's go to our next request, which is from John inside the Tiger's Den. And John would like to take a look at both the 30-year Treasury, so we'll pull that up, as well as the TLT. So, of course, Stevie grabbed the wrong tab. Let's struggling today. Let's get the right tab out here. We should see the 30-year Treasury. What do we know about it? We know that the 30-year Treasury is simply trading with inside its profile. It has support at about 112.5. It's going to be 112.19 is the support level. That's the bottom of its profile is what I should say. The center about 114.22 and the top up at the 117.29 area. So just a consolidation with inside that profile. That being said, we can see that its daily oscillator and change line is acted as resistance. And right now that's printing up at the almost 116 out there. So just a consolidation with inside the daily profile. The weekly profile shows us that price is below the bottom of its profile. That's at 114.15 out there. And we're at 113.18. So that's a real key area. Let's go take a look at the TLT chart. So this suggests that price may be pulling back to test that profile support level. I gave you the value for that. Let's take a look at the TLT. In the case of the TLT, its area of support, here you can see where price really rallied up in that oscillator and change line. Doesn't have the same kind of bottoming signal that we got on the daily time frame. But here, if we take a look at the TLT, its level of support would be 85.91, John. On the weekly time frame, you've just got a TD9 count top, no kind of bottom signal out here, other than price getting back and testing profile support at 85.59. And on a monthly basis, price is testing the oscillator and change line, as well as its bullish structured monthly profile, which has support at 86.57. Of course, it's going to take its P's and Q's from the 30-year Treasury for the most part. Talking about taking its P's and Q's from something, let's go take a look at those daily currencies. I can't just leave you hanging saying, hey, wait a minute, I thought you said we might have a U.S. dollar index bottom. How is that going to come about? Well, if you take a look at today's action, you've got bar number 8 that is formed inside of the euro, bar number 8 that is formed inside of the Great British Pound, and bar number 8 that is formed inside of the U.S. dollar Japanese yen. Each of those have been strong. In the case of the euro and the yen, as they move higher, they're telling you they're stronger. The U.S. dollar index is weaker. In the case of the U.S. dollar Japanese yen, as it's moving lower, it's getting stronger. U.S. dollar index getting weaker. So we're in bar number 8. That says in a TD9 count topping pattern, the daily U.S. dollar index does not have a TD9 count bottoming signal. At least to my recollection, it does not. But we're going to take where it's going to take its decision making from is really going to be from at least these three currency pairs: the euro, the yen, and the pound, that make up nearly 80% of the U.S. dollar index out there. So we've got a bottom signal and a topping signal for the euro and the pound, bottoming signal for the yen, that says that we should get a bottom inside the U.S. dollar index between today and Wednesday out there. I do have the May contract up here for Bitcoin. Bitcoin is trading above the center of its bullish structured profile. If it could hold that level, 87,799, it increased the odds of move to 93,808. The confirmation of that would be a close above the swing point high from March 24th. And that number is 89,710 out there. So there's your U.S. dollar index via the euro, the yen, and the pound. When we come back from this break, we're going to take a look at LTBR and Nike for Dan. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Let's go take a look at ticker symbol LTBR. This is for Dan inside the Tiger's Den. LTBR right now is testing profile support. Profile support is at the level of 702. We're trading at 697. We're trading inside its swing point from the trading day of April 4th. 1.6 million shares traded that day. In 2 hours of trading, a little over 2 hours, we've done 331. Price is pulling back with lighter volume, but you need a rejection of that. That means a close back above 713. As long as price stays within inside that swing point, meaning if it closes below 713, even if it's a light volume, you'd be potentially below that profile support area, and you could be moving back to test the low of that pattern of that swing point. On a weekly time frame, what do you have? You've got price just consolidating with inside the weekly profile. You've got support at 620 and a resistance zone between 1096 and 1333. Monthly time frame has a TD9 count top and should pull back to test support, which would be its oscillator and change line, and that is at $5.75 out there. So that's what I see when I take a look at LTBR out here. Let's go take a look at your next request, Dan. That was a take a look at Nike. Let's go see what Nike is doing. Remember, Nike's got that large A to B CD pattern on the monthly time frame that's been confirmed that suggests much, much lower price. It has a B point, which was a TD9 count pattern that had formed back in October of 22. The volume on that was 200 million shares. When it was passed with 306 million shares. There's your confirmation of your large A to B equals CD pattern to the downside. If we take a look at that out here, let's go just simply move the A to B over to the C point out here. And, man, it's got a long way to go before it gets down to that price projection level. That price projection level in about the $35 range. Now, we take a look at the daily time frame out here. What's the daily time frame show? The daily time frame shows a Rhodes Momentum Indicator bottom pattern. That actually formed on Thursday of last week. That says that it closed below Wednesday. That would be at the 53.34 level, would negate that bottoming signal for its daily time frame out there. Price is also trading into a swing point, and that swing point was April the 10th. And that had volume of 53 million shares. In 2 hours of trading, 4.6 million shares. Again, we got this gigantic, ginormous light volume day to the downside. It just says be careful and not necessarily to believe the signals that we're seeing. I'm not saying don't believe your lying eyes. That's not what I'm saying. I'm saying just realize it's easier for the market to be pushed around in this light volume, and that's what's taking place certainly as we take a look at individual stocks out here. The weekly time frame, if Nike were to produce a bullish reversal candle, that would confirm a Rhodes Momentum Indicator bottom. Short of that, price likely heads lower. And on the monthly time frame, we've already covered Nike. It has a confirmed AB equals CD pattern that suggests to move down towards that 30-ish level out there, right? 30, 35 or somewhere right around there. So, Dan, that's what I see when I take a look at Nike. Hope that helped you out with regard to that. Nicholas writes in and would like to take a look at BAC. Interested in taking a long position in BAC. Let's go see what that has to show us. Well, we didn't have the BAC charts up. Let's go ahead and put them up as we speak right now, and you're most welcome, Dan. Yes, Phil, funny Trump was against cuts end of last year. Oops. Yeah. I mean, you know, look, with regard to the rate cuts that Trump is arguing for, how short is his memory? Does he not remember that Janet Yellen started raising rates as soon as he came into office back in 2016? We're not really sure why she did that. I don't know if it was out of spite or what it was, but certainly rates were rising, and so too was the market. You go back and historically take a look at it. The Fed starts reducing rates on a consistent basis, the market moves lower with that. So not really sure that he really wants those rate cuts, but Bank of America, BAC out here, you're trading below the center of its bearish structure daily profile. And when you trade below that, that's at 37.17, and it increases the odds that price will make a move down to support, which would be 34.45. However, we can't make that call just yet because on a daily time frame, Nicholas, price is above its red oscillator and change on at 36.38-ish. I say ish because that number will move lower by a few pennies if price moves lower. You need a close below that to suggest that price is going to move down to 34.45. You're looking for an entry point. It may be that 34.45 level as price moves back to test that TD9 count bottom. Now, it may not get all the way down to test that TD9 count bottom from April the 9th, which had volume of 161 million shares. Today, BAC in 2 hours of trading is 11 million shares. You can't tell me we're not just totally pulling back with light volume today. Now, what you like about the weekly time frame is a TD9 count bottom, and the monthly time frame price holding support at 35.98. So what do you do out here? I say right now with price below the bottom or the center of its bear structure daily profiles, you be patient. Watch that 36, 38-ish area. You'd love to tune into a intraday time period chart and see some kind of bottom signal if, in fact, this is the area where, not right now, but the 36, 37-ish area is where a bottom could be forming from an intraday standpoint. So I hope that helps you out, Nicholas. And thanks for your request. Brent is looking for a bottom in the semis. SOXX is the ticker symbol. So let's go put that up on our screen. And if we've got time, maybe I can, let's just stay with this. In the case of the SOXX, Brent, we are trading below last Wednesday's low. We're trading below last Friday's low. And on a daily time frame, we're trading below its red oscillator and change line. You know what that says? That says odds favor the semis, this SOXX, even though it's on lighter volume. For example, today's volume out here is at 1.7 million shares. That's going into the TD9 count bottom that has 18 million shares. Extremely light volume. Nonetheless, as long as price remains below that red oscillator and change line, Brent, it could be targeted its buy zone. And the buy zone would be between 152.90 and 157.50. The weekly time frame for the SOX has a buy the D point bottom pattern. Price, it also has a TD9 count bottom pattern. Price may be targeting its profile support level. There's a new profile that formed last week. It has support at 156.01. It has resistance at 209.93. And the center is somewhat, primarily, it's pretty close to the center of that profile, 186.83. So nice bottom there. So here it says price might be targeting 156.01. We had 152 to 157 on the daily time frame. So we're going to go with 156.01, and the monthly time frame chart will form bar number 8 of a TD9 count bottom at the end of this month. That says a bottom could have formed this month. Perhaps it goes into the next two out there. And if we get below the session lows, not the session lows, if we get below the pattern pattern lows of April 7th, those lows being 170.42, then it is not likely this month that we see that monthly TD9 count bottom out there. So that's what I see when I take the semis. Brent, hope that helps you out. GTE writes in, would like to take a JBHT. So let's get that up on our screen out here, see what that is doing. JBHT is targeting its Rhodes Momentum Indicator bottom that formed on Thursday of last week. The swing point, which was from Wednesday, April 16th, did volume of about 3 million shares. So far today, in 2.5 hours of trading, we've done volume of 345,000 shares, going against 2.9 million shares out there. Wowzer. The weekly chart looks horrible. Yeah, there's nothing good that I can find on the weekly chart. Geez, the monthly chart looks even worse. Now, big A to B equals CD pattern to the downside. So if it's present on this larger time frame, it's present on the smaller time frames as well. Let's see where it looks to me like we've attained that 1-to-1 level out here on the monthly time frame. Oh yeah, big time. And so what you'd be looking for on a weekly chart would be a bullish reversal candle to confirm a buy the D point bottom pattern. But watch for the potential failure, even if it's on light volume, and that would require a close below last Wednesday's low. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at ticker symbol TNGX. This is for Rye inside the Tiger's Den. Rye on a daily time frame, TNGX formed a Rhodes Momentum Indicator bottom pattern. And what we have price doing is consolidating with inside its daily profile. It's taking on its sell zone. The sell zone here exists between $1.32 and $1.38. If you get two consecutive closes above $1.38, which we have done, it suggests that price should run up towards the TD9 count breakdown area. That's at $1.94. If we take a look at the weekly time frame, you completed a TD9 count bottom pattern last week. That suggests now we did have a new profile formed also last week above price. Generally speaking, that is a bearish message out there. That doesn't mean that price won't rally. So if you can get two consecutive closes above $1.38, then it could be signaling to you and I that price wants to make a move towards $1.64 to $1.78 level. $1.70, that's the area where price would, if it's just a counter trend move to the upside, where price would indeed find resistance. That doesn't mean that it will, but right now the signals on the weekly time frame are not really bullish for TNGX, even though you've got that nice weekly TD9 count bottom. The monthly time frame does not have any kind of bottom pattern or signal as we speak, so it's really going to be up to the daily and the weekly out there. So first watch the daily as it deals with that level resistance at $1.38 out there. So going into the breakout here, and I was trying to pull up the chart that showed interest rates. And I don't know why it's not. I think because that symbol changed. So the IRX. So I'll have to update that chart here after the show is over. In the meantime, we just have a few seconds to go. Let's get back in and take a quick peek here at the intraday charts. The intraday charts, again, it's a 60-minute time frame that you're watching. 3 of the 4 charts, that's the ES, the NQ, and the Russell 2000, will each go ahead and confirm a TD9 count bottom in the next 4 minutes. That pattern will complete at 1 p.m. So if there's going to be some type of intraday rally out here, it's going to take place between noon and 1. Folks, stay tuned for all the other great programming. I'll be back later this afternoon with Jacob. And so have a magical Monday. If I don't see you this afternoon, we'll see you tomorrow at 11 a.m. Take care and have a great day.